Okay guys, so last week I used a high impact news event to catch a pretty nice trade on Euro USD, and that trade could have gotten you over 100 pips and some pretty good risk to reward as well. So I want to explain the strategy and break it down for you guys so you can use it yourselves. So I've written a little step-by-step process that I do. So we'll go through that and see how I use it. So the first one is to look at when the high impact news is. So I use FOREX Factory to see when high impact news is, and these are the red folders. So at 8:30 a.m. New York time on Tuesday, November 15, there is red impact or high impact, news. So I'm looking to see big movement during that time. So at 8:30 a.m. and a bit after. So that's the first thing. Next, have we taken buy side liquidity or sell side liquidity? So over here, we can see this is the buy side liquidity, and we can see it hasn't been taken yet coming into this week. So that is our next point that we're going to see. And once we take buy side liquidity, we'll want to retrace and go to take out sell side liquidity on a lower time frame. Next, look at what high time frame point of interest price is being played into. So basically, of course, we're not there yet, but we look at higher time frame point of interest above the liquidity, so the buy side liquidity in this case. Here we've got a small gap. So I made a video on this, the Forex smart money traps. You can see it's very small. So this is where I'm expecting price to go into, or into the order block. It doesn't really matter too much because we're going to look at the reaction that happens there, but we just want to mark these out so when price does get there, we know what to do and how to act. So the next step 4, 5, and 6, I'm going to go to the lower time frames and show you guys how we do it or how I do that. So we'll fast forward over to the New York session of the 15th of Tuesday. So here we have the buy side liquidity, this line there. So we're expecting that to get taken out. So I'll mark out the news event here as well, 8:30 a.m. You can see Monday was here. We just had consolidation just right before the buy side liquidity, so haven't taken that yet. Then price here shoots right through it and takes it. Now, even if we go to a 5-minute time frame, we can see that, yes, we took this out, but we didn't really push down afterwards. We're kind of just mucking around there. Then price starts to fall a little bit, goes back up. It's really just, is not really showing any move that it wants to go down and start dropping. So that's showing me that at 8:30 a.m., the news event is going to want to push price lower. So fast forward to that, we can see still hasn't really taken out or broken significant structure, so we don't want anything. We don't want to look for shorts yet, sorry. Now going on the lower time frame, just the 1 minute, so you can see the reaction. Now step 4, if you go back and check, is we want to see where price moves, where the news moves price. So if it's to go up like this, which it did, aggressively, normally the first move is a fake move. So if it goes up, we're now waiting for it to come into our high time frame point of interest. We've taken out all this liquidity to the side here. So now a lot of traders will be getting trapped thinking, oh, we're bullish, we're going to go up and up. But that's just a fake move to induce people and trick them. So now we'll wait for price to tap into our point of interest, which it has. And step 5 is to wait for a break of market structure or a shift in market structure. Now, I actually caught the trade right here. That's where I caught it, but that's an advanced entry and it's a bit risky. So I'm going to show you the simple entry that is just as good, is the shift in market structure here. The break of market structure is just a little bit too far away. You see from here down to here, it's like over 50 pips. So we're just going to use the shift of market structure, which is also more than okay, because we know price has no need to go any higher. It took out buy side liquidity, took out this liquidity, and tapped into the weekly fair value gap. So now that we've had this break here, or this shift in market structure, we can then use this order block to enter off. And that is simply what I'll do. I'll wait for them price to come, tap back into here. Right here it taps into it, and then we can target lower prices. So I'll show you where to target in a sec. So here we've got another break of structure. We've got the order block here, so we can look to enter there. And price taps it, so there is another entry. So you can see, even if you didn't catch it up here like I did, you still can catch it there. You can catch it here. Price drops again, breaks that little wick, breaks here as well, and then we have another order block here with a fair value gap beneath it. Very important that there's a fair value gap, and this can be another entry. So I just want to make this a bit cleaner. And yep, and see the reaction as we start to drop. So now we want to see where to target. So that's step 6, the liquidity pools. Now we took out buy side liquidity here. We tapped into a weekly fair value gap. Now because it's a high time frame point of interest and high time frame liquidity, we want to go for a large liquidity pool or a high time frame low. So on the 4 hour, this is the low here, and we can see Asian lows is where a lot of liquidity will be, and especially because there's consolidation there. So that we can target there. So if we go to the 1 minute time frame, you'll see on either of these trades, here you've got 14 risk to reward, 14 RR, 136 pips, 19 risk to reward, 131 pips, and again 19, 126 pips. So even you could have caught all 3 of these. Even if you caught one, it's plenty. Like, it's honestly so much. If you look on the 1 hour, you can see there's the next liquidity pool, and then on the 4 hour as well, that's the low. So go back to a 5 minute time frame, and you'll see after the entries, price really just dropped, retraced a little bit, but overall it's just dropped. And there you have it, just a simple way to catch these trades. Hope you found it useful. If you did, please subscribe and click the like button. I would suggest practicing this first on a demo account, because news is pretty volatile and you don't want to blow your account. So practice on a demo account first, and then when you get comfortable, just risk a little bit on your live account until you're really comfortable. Until next time, take care.